Good morning, good evening, good afternoon, traders. This is Sage FT from the live trading desk coming at you with another Sunday night review and rev up. Okay, this last week was absolutely to expectations. I know it's kind of hard to see here, but the target was the upper part of this large red bar is where we closed the week out at. The reason we liked it was a perfect bounce off the 200 simple on the daily chart that's up rising. Let's go ahead and take a look at the 4-hour chart. Let's see if it tells us anything as we're kind of zooming into this thing here. All right, so after we get the bottoming pattern here, it is nothing but all off to the races here. And what we were targeting after we confirmed that we were starting to break a structure here, we have a higher low, higher highs. So when do they start to zoom this thing off into the sunset here? Well, when it breaks this line right here is where we're watching, right? They tried to break it, fail it, break it. Once we broke it, it was game time to the long side only. 4-hour chart was counter trend upwards all week long. And the reason I had a very, very strong suspicion that we were going to move up into the 55, 60s was because of the removal of the liquidity at this bar. They didn't like that. Too much removal. They had to fix it. You could see they've fixed every red bar over the last 2 or 3 weeks. Last week, let's go ahead and go to the 15-minute chart. Now, the one thing I want to point out on the 15-minute chart is this. Okay, on the 15-minute KISS chart, we were position 1 to the upside all week long. All week long. That's right. You're going to hear it first. Here, we had just a pullback into narrow state before we went wide state. Position 1 to the upside several times. All right, so now, how did we play it? Well, what I want to do is I want to take a look at how we were able to take advantage of finding removals of liquidity and taking advantage of it. So now, if you remember, Mancini was 38 to 42. So let's just look at Friday's example as a cross section for what we're looking for every single time. We remained inside the narrowest range the last 7 days until the last, very, very last part of the day, and then the day was over. So because we're inside the narrowest range of the last 7 days on Friday, which every single morning when we came in this week, we were narrow range. It either pushed outside or it didn't. The range was shortened or lessened over the last week. All right, so let me draw this real quick. And I want you to pay attention to how I'm doing this. What we're looking for when I draw this is the ignition or exhaustion bar to start the whole trade off, right? And so in this case, the last largest bar is right here. Now, what we want to do is we want to take into consideration all of the price action below it before it turned around. Okay, so now this becomes 47. Next thing you're going to do is you're going to find the next beginning of the removal of liquidity. Now, I want to remind everyone there's only 2 ways to remove liquidity. Let's look at a red bar. If we have a very, very large red bar, how is that created? Through the removal of liquidity. A, selling to the bid. B, removing the bid before it's sold to, making them chase and pay a lower price at this point. Those are the only 2 ways that you can actually remove the liquidity. And then when you have both of them in concert with each other, you have a large or outsized red bar. So now what we're watching for is, because we're still bullish on the larger time frames, where do they turn this thing around? Where do they have the highest probability of turning it around? Well, that just happens to be here at 47. So now, how do we trade this? All right, so the first thing that we're going to do is we're going to find our risk reward ruler, and we're going to go like this. Okay, there's our first target, 56.50. Okay, here comes our second. Here comes our second target. Now, that's way up there. So if you're in a 100 level trade, or you're a 100 level trader, how would you have traded it? I'm so glad you asked. Well, once the 8 EMA crosses the 20 and turns it up, that's when it's go time. So let's take a look right here. All right, so anything after 9:12 a.m., you are no longer looking for shorts. Now, if you are still in the process of finding your 100 level trade, you can't really trade this chop like this. You had to wait until noon 12 to go long. You had to wait for position 1. But those of you that are trading greater than a 100 level trades, or your foundational trade, and you've gotten permission from your coach to move on past your 100 level trade, here's the sweet spot. Okay, the sweet spot is once this thing turns around, you're looking for longs only. So now where's that at? 912? Perfect. So now it breaks the 47s after our KISS chart turns bullish. I'm long here. Now another way that you can do it, tell me if this looks familiar to you. You can go long here. 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 You can go along here. Okay. You see where we're going with this? What I'm showing you is the change of character in the market, the change of structure, right? Here's where it's old losing Rev getting trapped, saying, oh, there's no way it can go higher. I think I'll add one here. I think I'll move my stop up. Okay. Now, the other thing that I want to show you is what we were looking for was a big move up into this, and we got it in a hurry. This is a nice gap on your volume profile. Here's where they started to build the steam. Here's your higher low, right? And then all of a sudden they just took it on up now. And look, they tested it and brought it back up. Okay, so now that brings us into next week. So do they test back into the 5,500 evens, or do they just take this thing to the stratosphere? Let me pull up my larger time frames. Okay, do they take this thing into the stratosphere? Because we have a very large removal of liquidity. We have the removal of liquidity. And so now, do they take this thing higher, much higher? All right, as you see drawn here. So this is what we'll be kind of looking at next week. Let's take a look at the news. It's a very slow news week, but there's a little bit of impact here. All right, so Monday at 9:15 a.m., we have member Waller, which is not so much. Bostic on Tuesday. FOMC minutes at 2 p.m. Wednesday. But then we have the Jackson Hole Symposium start. And Thursday, we have unemployment claims, flash manufacturing PMI, flash services PMI. Okay, Jackson Hole Symposium starts August 22nd. Friday, 10 a.m., we have Fed Chair Powell and new home sales. I don't know how much volatility or expansion of ATR we can be expecting for next week, but what we want to watch is, do they want to come in and fill this gap here early on or not? Okay, what we're going to do next week is we're going to make sure that we're trading in process. Those of you that have a 100 level trade, I want you to trade that. Those of you that do not have a 100 level trade, I want you to get with your coach. Okay, it is time to make that decision. Your kids are starting to go back to school. It's time to get with your coach. It's time to move forward off this plateau that you're on and really dig in. Maybe next summer you can spend more time with the kids. Okay, that's going to do it for this Sunday edition review and rev up. Make sure you're following us on Twitter. Sage FT, Revenwood1 is the handle. Make sure you're watching us Monday through Friday, 8 a.m. to noon on the live trading desk on YouTube. We'll see everybody next time, and we'll see you tomorrow morning in the room. Thanks.